Hey, welcome back to the channel. I'm Russ, and we got another portfolio update for you. This time it's in the month of November. Hey, what a crazy month it's been, right? We got another president coming in. Or again, the market seems to love it, so hey, here we are. And along this journey, we'll hit the dividend increases, the dividends received, what we sold, what we bought, and a quick portfolio overview. But before we get into all those shenanigans and hijinks, check it out. I am recording this on Black Friday, and Seeking Alpha has a Black Friday sale where when you use my affiliate link, which is found in the description below, y'all can save $90 on an annual subscription and a 7-day free trial. And I do share all the portfolio activity every week for free in the newsletter, which you can sign up also in the video description below. So here's some increases. Now this is a new position and I didn't buy it until November 12th, but on November 1st, Clear Secure raised that dividend 25%. Which they're in the habit of raising that thing every 6 months, or as around here we call it biannually. And also on November 1st, ExxonMobil raised the dividend 4.2%, which increased our patty $7.04. Monthly payer Main Street Capital raised their distribution 2%, which increased our patty $9, and they also will be paying another special dividend in December, which will give us an additional $45. The Global X MLP and Energy Infrastructure ETF, ticker MLPX, is one that I wish I would have bought a whole heck of a lot more of when it was in the low 50s. Here we are in the low to mid 60s. And I had sold out, if you aren't aware, Enterprise Products Partners because I was holding them suboptimally in the Roth and the self-directed IRAs. Those should probably be held in taxable brokerage accounts because they are already tax advantaged. So hey, I was holding them in the wrong spot and I decided to buy MLPX because it gives me exposure to all the midstream companies like EPD and Kinder Morgan, and it pays a qualified dividend, so no K1 to worry about. But because of their distribution increase, we receive an extra 38 whopping cents. And then for the 23rd straight year, Nike raised their dividend, this time good for 8.1%, which increased our patty, or projected annual dividend income, $6.36. And after all those dividend increases and special dividends, that's an extra $67.78 of income heading our way. Dividends we received in the month of November, as per usual, $52.70 from Realty Income, ticker O, $25.55 from Agree Realty, ticker ADC, and $36.75 from Main Street Capital. Those three are our monthly payers. And check this out, with that main dividend in November, we are officially over a 10% yield on cost. Now, this is an adjusted yield on cost. My own calculations, it's not perfect because I didn't buy all 150 shares at the exact same time, but it's gonna be kind of close. So the way you look at this is the current share price when I made this on the 27th of November was $55 with the current dividend yield of 5.45%. So my average share price, if you look at the brokerage account, is $37.36 on 150 shares for a really nice yield on cost of 8.03%. But if I take all the special and regular dividends from Main Street Capital, which is to this date of recording has been $1,113.56, and divide it by the 150 shares, I get an average dividends per share of $7.42. Subtract that from my average share price of $37.36, puts me at $29.94 of an adjusted share price. And that's good for a yield on cost of 10.02%. So how freaking cool is that? I'd love to know if you do anything like this, figuring out your dividends received, because eventually, if you hold something long enough, you will receive your entire investment back, and it may take some years for that to happen. So share with us in the comments below if you got any of your initial investment back on any of your investments. AbbVie, ticker ABBV, hit us with $38.75. Starbucks, ticker SBUX, $47.58 of dividends came our way. And the aforementioned Global X MLP and Energy Infrastructure ETF, ticker MLPX, hit us with $30.64. Hitting us with a Black Friday special, Nexstar Media Group, ticker NXST, paid us $194.35. And a place that we're parking some of our cash while we're waiting to deploy it, the Schwab Value Money Fund, ticker SWVXX, $5.70, for a grand total of $432.02 of dividends in the month of November. So we're still peeling off some shares of SWVXX. I think we have about $1,500 left in that in the retirement account. And we sold 500 shares. It always carries an average price of $1. Now this is averaged across 3 portfolios for the month of November. To keep it simple, we bought 2 shares of Nike at an average price of $76.69, 5 shares of the Vanguard Total Stock Market ETF, ticker VTI, at $287.56. Now it's kind of crazy with VTI, the Total Stock Market ETF, because we're buying, as of this recording, it's $300.14. And we don't know how high it's going to go. Year to date, it's up 27.38%. And it felt really pricey buying it in the 260s, but here we are at 300. And what's really crazy is if we zoom out, that's nuts, because you could look back to October of 2007 before the GFC and say, holy cow, $77. Look, we're at all-time highs. This is nuts. How much higher can we go? So I'm trying to think about zooming out even further. 20 years from now, what's that going to look like? Are we going to look back and say, damn, $300. What a steal that was. I wish I was loading the boat. So that's why today on Black Friday, I bought a share at $299.90, which was an all-time high. And of course, we're now at $314, went a little bit higher. But, you know, that's the crazy thing about investing that I'm trying to wrap my head around, is not getting too wrapped up currently and thinking how back then you could have picked all-time highs and said, oh my God, look how high we are. And it just keeps grinding higher, because really VTI is just a bet on America and on the US companies that make up the stock market. And remember, with VTI, I know a lot of people like VOO instead, which is the S&P 500 equivalent through Vanguard. It's pretty much the 500 largest stocks in the US stock market. But when you're buying VTI, it is basically the total investable US stock market. And it does have a stupidly low expense ratio of 0.03%. But I wanted to show you this, that VTI, as of this recording, when you buy a share of VTI, you're buying a slice of all 3,644 publicly traded US companies. And I understand it's really heavily tilted toward tech, 33.7%, followed up by consumer discretionary at about 14%, which of course means the Mag 7, right? That's really what's driving it. Apple is currently the largest holding, and you see this percent of fund, 5.94%. What that means, for every $100 coming into the fund, $5.94 is making its way to Apple. And because so many people just buy this as part of retirement plans, it's really what keeps driving the market higher, is we all just keep investing without even thinking about it, right? And the same thing with NVIDIA. $5.65 of every $100 is going to NVIDIA. But remember, while it pushes it higher, if there's a sell-off and everybody starts selling VTI, that's why some of these big names fall really hard, because then $5.65 will be coming out of those companies for every $100 of VTI. And then if you lump the Googles together, come on, Berkshire is really that part of that Mag 7. They're in the number 8th spot, but 7 if you lump Googles together at 1.45% of the fund. And this is our new position, started in the month of November. Clear Secure, ticker YOU, 10 shares at $26.66. This is an exploratory position. I really like the company. Clear Secure is essentially identity verification. When you're in the airport, they'll help you skip the line, but I like that they're trying to branch out of the airports into partnerships with Uber, Home Depot, places like that. So I like stadiums, Allegiant Stadium in Vegas. They're really trying to grow and expand the business, which is what you want to see. So just started something I like to call an exploratory position, meaning that I'll just keep dribbling in shares and look deeper into the company because honestly, for me, and I don't know if you're the same, but I feel like I have to have skin in the game because they say you pay attention to what you pay for. So there I go. Put my money into Clear Secure. I think it's at a good spot. I think it was unfairly hit from their last earnings because people don't understand their hit to the free cash flow that they actually telegraphed was coming. But moving on, and without turning this into a Clear Secure video, we bought 7 shares of Realty Income, ticker O, at $56.68. Ticker VICI, Vici Properties, going a little nutty here. 26 shares in the month of November, average price $31.63. 2 more shares of MLPX, the Global X, MLP and Energy Infrastructure ETF at $56.36. And I know they don't pay a dividend. I keep buying them when they're under $40 a share. I want to get to 200, currently at 187 of Harrow Incorporated, ticker HROW. We bought those at an average price of $39.21. Now, if you're a lunatic and you have nothing better to do and you want to check out this spreadsheet, I do have it linked below. So the annual dividend income that was added from our buys was $99.17 from those 500 shares of SWVXX. We lost $25 of patty. So November had a net patty gain of $74.17. Yes. There's our dividends received of $432, and the dividend increases $67.78. Running through the portfolio really quickly here. Pause the video if you want to look at some of these numbers more in depth. I don't know how else to share this because I can't share Simply Safe Dividends, but hey, if you want to check them out, I'm not an affiliate for Simply Safe Dividends, but you can get a 2-week free trial with just your email address. How cool is that? Our yield on cost, 4.25%, and the actual dividend yield is 3.5%. We have a current annual income of almost $6,400. Now we're down to 23 total holdings, and why don't we sort this by percent of portfolio? So we're still at the tippy top with Nexstar, where we're up 8.2%, and they are paying us $777 a year. And remember, this is not our entire investment net worth. We have a substantial amount in our 401k through the work, but this is what we share on the channel. So J&J and PepsiCo are number 2 and 3, and remember, I'm likely going to be liquidating out of these positions to pay off the beautiful 2021 Volkswagen Atlas that we bought because I don't want that 7.69% interest payment for the next 3 years. But we're up 4.3% on J&J and 8.5% on PepsiCo, so I'm hoping they come up a little bit more, and I will likely be selling them sometime in mid-December. SCHD, we got those 500 shares now after the split, up almost 20% on those. 45 shares of Visa in 2 accounts. Would love to have that at 100, and I was really hoping it would have just hung around the 260, 270 range, maybe even lower, but the damn thing up to $315 or $316 right now, not showing any signs of slowing down. So we'll see. Got my eye on Visa to drop below 300. 207 shares of Realty Income. We're down 1.9% on those, so they've been struggling a bit, but we're still adding. And Aries Capital, 405 shares, not really adding with those, up 21%, which also the same as, oddly enough, Nexstar Media, paying us $777 of annual income. Up to 266 shares of Vici, up almost 9%. Those 150 shares of Main Street Capital, probably, it looks like, and it feels overvalued, but again, we're up 48.5%, not including dividends received or those special dividends. 78 shares of Starbucks, which I think is just a little bit overvalued. That one I'm kind of sore at. Was really hoping to get 100 shares somewhere in the mid to high 70s and low 80s, but I'm going to wait for that one to come down, and I'm hoping. I got my fingers, eyes, and toes crossed that will drop down, but we're up 33% on those shares. Huge fan of Agree Realty. This is another one I want a lot more of, but it just feels a little bit over exuberant and expensive here. Really want to see that one below $70, but we're up 30% on Agree Realty, even though Simply Safe says it looks reasonably valued. There's 187 shares of of Harrow, up 142% on those. When it was in the 50s, I was up almost 230, 240%. And I think it got a little bit ahead of itself, so I'm glad it's coming down. I'm excited to buy it in the mid to high 30s. There's 23 shares of VTI. I don't think I'm smarter than the market. I like this as a base. And one of my ideas is that if Visa really starts falling, I'll probably peel off some shares of VTI to put into Visa, but it's a good placeholder right now to have some cash. And we're up 7%. Lockheed Martin, I think I'm just going to hold these indefinitely and just collect the dividends and eventually figure out how close we are to getting all of our money back. But our average cost per share, $337, and we're receiving about $132 a year, and we're up 56% on those. ExxonMobil, we bought a lot of during the COVID crash. Average price, $45.16, so we're up 161% on those with a yield on cost of 8.77%. But check it out, my fine feathered friends. I did my adjusted calculation for them, and we have a yield on cost of 12.8%, and our average share price is currently $30.94. And while I do feel a little bit price locked and price anchored, I don't want to add any more, so I'm curious to see if and when we will get all of our investment back of ExxonMobil. So it really shows you, man, when stocks that are really, really quality businesses get hit hard for a major sell-off, if it's not individual to the company and it looks like they'll pull through, what a great time to buy. Too bad I didn't buy more of AbbVie as well back in 2018, but $86 is our average cost per share, up 111%. Only 25 shares though. Nike, really liking them here. Didn't have any cash in the account when they dipped to 72. Should have bought more, but we're up 2.6%. Average share price $77 on 53 shares of Nike. Because I think they're going to come back with their new management in place. Elliott Hill, their CEO, they brought him out of retirement. He is an industry insider, been with the company for many, many years, and I think he's going to right the ship over there at Nike. It's probably going to take some time. MLPX, 47 shares, we're up 19%. This thing just keeps going up because all these midstream companies, they don't go out looking for the oil. They don't go out selling it. All that they're doing is they're moving oil and charging companies like Chevron and Exxon and Marathon Petroleum to use their infrastructure to move the oil and liquid natural gas. McDonald's, we've just been hanging out at 10 shares, $176. And this one I could see us adding more to if it gets into the mid to low 200s, but we're up 67% on those. Chevron, kind of the same story as Exxon, only 15 shares, average cost per share $84. We were buying them as well during the COVID crash, up 91% on those. SWVXX, 1,506 shares. Again, we'll be peeling these off in the months ahead to reinvest into the stock market, stuff like VTI and Visa most likely. And then bringing up the bottom, Innovative Industrial Properties, 10 shares. We had a lot more of this. I sold all the rest that we made a profit. These are the 10 that I was negative on, and I thought I'd play a fun game. I don't know why I'm playing games with it, but hey, it's what we're doing. I was hoping to get back to within down 10%, so currently we're down 36%, and it was up in the 130s with our average cost 171. Really good company, really well run, but I have a lot of issues with the potential cannabis legalization nationwide and what that might do to their business model, because from what I've seen, they help out a lot of these medical cannabis companies by essentially charging them higher rent. And if some of those operators, if they folded and they had to move out, I don't think you're going to get some in to agree to pay that higher rent. So it makes me a little bit nervous, but either way, I'm just going to keep holding these. Dividend yield currently of 6.95%. And yeah, that one I think is a little bit more speculative. And then we already talked about Clear Secure, 10 shares, we're down 2.7%, and I'll just keep trickling them in when I have a few bucks laying around. We have about $500 worth of cash, and add that to SWVXX, we got about $2,000 of cash. And oh, one more thing about SWVXX, it takes 24 hours to sell, so if I were to hit sell today, I wouldn't get the money until Monday morning. This is being recorded on Black Friday. So we started buying Realty Income again because I think they have some really interesting news that I shared in this floating little box next to my head. Hey, if you like the video, like, subscribe, thumbs up, all that good stuff. But yeah, if you want to check out the news from Realty Income, click the floating little box next to my head, and I'll tell you all about it there.